head of banking supervision at the Bank of Ghana, JC, has warned savings and loans companies to take a critical look at rising costs of interest rates and non-performing loans in their books. He says the level of non-performing loans is becoming a huge challenge for the savings and loans company. Speaking recently at the launch of the 20th anniversary of Bayport Savings and Loans in Accra, Mr. JC assured that the central bank is addressing the issue. Here to react is Trinibua Kodia-Boakye, who is Executive Secretary of the Ghana Association of Savings and Loans Companies. But first, let's listen to Mr. JC.
Observe some marginal increases in the NPL stock of Bayport. And Bayport could manage this to improve the asset quality of the institution. This will also enhance the profitability of the institution. So this is one area that Bayport would have to look at. Then also, Mr. Chairman, Bayport would have to diversify its funding sources to reduce the leverage and also, one, cut down interest costs. Otherwise, financial risk could crystallize. So these are the areas that we thought Bayport should be looking at to improve, yes, to make more profits for the shareholders, to improve customer confidence, increase profitability, so that they can lend more to grow the economy. So look at these areas for us.
Join us, Trinibua Kodia-Boakye, Executive Secretary of the Ghana Association of Savings and Loans Companies. Thank you for your time. What's your reaction to this caution from the Bank of Ghana? How seriously are you taking the impact of rising costs of interest and non-performing loans on the operations of savings and loans companies?
Thank you very much, and good afternoon to your viewers and listeners. This is a welcoming information because where you are operating within a space and your regulator is very much interested in what you do to become sustainable, what you need to do is to embrace the advice. And of course, they have seen that some institutions are having escalation in cost of interest. And when we say cost of interest, there are two fronts. One has to do with the issue of the price of the loan, and also one has to do with your liabilities, that is your deposits and all that. So we acknowledge this, and this is something that all the players are actually paying attention to. As you may be aware, we're going to have our AGM come this Wednesday.
Trinibua Kodia-Boakye is Executive Secretary of the Ghana Association of Savings and Loans Companies, reacting to a word of caution from the central bank, asking them to diversify their funding sources and avoid financial risks as a result of rising interest costs and non-performing loans. We'll try and re-establish contact with him. We lost you, but I understand you're back. So you're making the point about this being one of the issues you're going to discuss at your AGM.
Yes, and that we must also appreciate that it doesn't happen in a vacuum. Where you have rising inflation, the economy is not doing well, your country risk is high, and also T-bill rates are very high. Your investors and your depositors will always look for a higher interest on your loan, on the loans they will give to you or the deposits they will place with you. We also have seen that the legal system, we also need to look at it so that these default loans, we can fully deal with it. And this is where we have been calling for a special court to handle the issue of default or recovery. But that does not prevent institutions from paying attention to this. And it has been our advice that we focus on more of current accounts and savings accounts instead of fixed deposit. And to the public, what we will always encourage the public to do is that we also have a role to play. We should not be chasing higher interest rates when we are making deposits with any institution. because the higher interest they offer you on your deposit, the more risky the business is. Again, when we also take loans, as we have been paying, let us continue to pay. When you have a challenge, engage your financial institutions. So this conversation is something that we are very much interested in, and we have been having it over the period, and we are going to continue this during our AGM.
Yeah, the central bank talks about diversifying funding sources. I think you mentioned that a bit. Does that solve the problem? Does that help enough?
There are a number of reasons why you will have a higher interest rate. The national economy is one. If you diversify, there are a number of institutions who have gotten investors from outside the country. They'll be giving you an interest rate which is lower, but your hedging cost is so expensive, and so it wouldn't. But of course, who looks at other alternatives instead of focusing on fixed deposit, and their services are also giving confidence to the public. Then the public will bring them the current accounts, the savings accounts, and these social accounts that come with a lower interest. So diversification is a key thing, but it goes beyond diversification, which we are currently having this conversation.
And what can the central bank itself do to help? Because there are some who suggest, well, the rising cost of interest is as a result of the policy rate hikes that have been effected by the central bank recently. Certainly, they can't, they have a role to play in this. They can't absorb themselves of it.
Yes, of course. One of the ways, as you've mentioned, is the policy rate. Second, where we are able to work with the government to bring down the Treasury Bill rates, which is a big influence thing on the whole market. The third thing is where we have some of our members who give government employee salary loans, and the government is in default for a number of months. This is actually impacting on some institutions. So it's a conversation, and I am very sure that it's not going to just take a day to conclude on this. And we will continue to collaborate with the central bank and, of course, government, so that we all bring the interest rate down. Of course, if you have your interest rate down, it helps the customer, it helps them to pay their loans, default comes down. If the courts are also helping in recovery of defaults or defaulted loans, the customer pays the loan, the next person gets his money, interest rate goes down. I will encourage financial institutions to also look more at operational efficiency, embracing technology, and we all working together to making the customer happy and the shareholder also bringing in the necessary funds to cushion the various financial institutions.
Well, in just a minute, if you can, what are your expectations ahead of the mid-year budget presentation, the savings and loans companies?
It's our expectation that the government will honor his commitments to those that they are borrowed from. The next thing is also the financial institutions who have who are involved in the DDAP. We want to see progress made in it. Again, if Treasury Bill, any plan that will make sure Treasury Bill rate comes to the barest minimum to make the DDAP more reasonable. These are some of the things. And of course, those that have their funds locked up, including the controller loans that they are not remitting the financial institutions on time, if they are able to receive some good news, it will help boost confidence. And we are in to support the government achieve its target and to help the recovery of the economy. We are in to help the economy.
Thank you so much. Happy to speak with you, Chenebo Akodzi-Abuakye, Executive Secretary of GASALC. Thank you so much for your time. Well, he talked about interest rates on Treasury bills, or they continue to surge on the money market to nearly 30%, as the government recorded a 31% oversubscription. Now, the oversubscription was as a result of a lower target of 1.57 billion cedis. Head of Trading at Republic Securities, Patrick Edemagama, is on Zoom with us. So a 31% oversubscription of T-bills, and that's because government lowered its target to 1.57 billion cedis. Give us a breakdown of how the auction went last Friday.
All right. Good afternoon, Daryl. On the money market last week, the government raised about 1.9 billion against a target of 1.5 billion. Among these, it was enough to cover the maturing securities of 1.67 billion Ghana cedis. And then the rejected bids were about 5% of the 91-day bids that were tendered in. The 91-day cleared at a rate of 24.39, rising by 43.84 basis points, which took the chunk of the bids that were accepted. The 182-day closed at 26.03, increasing by 23.25 basis points. The 364-day bill closed at 29.64%, increasing by 39.42%.
What's your analysis of the outcome, and what are the expectations for this week?
Well, for this week, we expect the trend of the oversubscription to still continue, because the target we are expecting for this week is 1.7 billion for the 91-day and 182-day. Anytime we see targets below 2 billion, we see that the oversubscription rate goes up slightly. So we expect that to come in for this week.
Well, on the stock market, we have our eyes on share prices of Societe Generale and Farm Milk, which are expected to rise on demand this week. What is the anticipation?
Well, again, we are seeing bids rise for these two stocks alongside MTN. We expect that to continue for some time. The interest is there, but the supply side is really dry on the market. So when this continues, we expect the share price to also rise in the short time.
Yeah, and I want to ask you about this, because the Ghana Stock Exchange has indicated it's working hard to reduce the concentration risk on the capital market, a move that will reduce any losses as a result of an economic shock. Now, according to the Managing Director, Abnamwa, this is being done with the introduction of additional products on the market, such as the commercial paper market, which is awaiting approval from the Securities and Exchange Commission. What do you make of this?
We have a market that is highly concentrated on stocks. As of now, we have about 36 listed equities, 1 depository share, 1 preference share, and 1 exchange-traded fund. If you look at this composition, it's not really good for investors, because they are skewed towards equities. But bringing in more exchange-traded funds and more commercial papers can give that composition that will help the fund managers to make the best out of the market.
Okay, thank you so much, Patrick Edemagama, who is head of trading at Republic Securities. I appreciate your time on the marketplace. Just